This is how a financial crisis becomes a food crisis, and how a food crisis becomes a war. In 2024, global debt hit $323 trillion, according to the Institute of International Finance, the highest level in human history. In that same year, 295 million people across 53 countries experienced acute hunger, a number that rose for the sixth consecutive year, according to the United Nations Global Report on Food Crises. And in that same year, famine was officially declared in Sudan and Gaza, the first such declarations since 2017. These three facts are connected. They have always been connected. The ledger and the breadline are two sides of the same coin, and the path from financial collapse to mass starvation to armed conflict is one that humanity has walked before, repeatedly, with catastrophic consequences. The numbers converging in 2026 suggest we may be about to walk it again. The modern food system appears miraculous on the surface. A farmer in Kansas plants wheat in spring, and that wheat becomes bread on a shelf in Cairo by autumn. But this miracle runs entirely on credit. Every single step of the food chain, from seed to supermarket shelf, is financed by borrowed money. Farmers borrow in spring to buy seeds, fertilizer, and diesel. They plant their crops hoping the harvest will pay back the loan. Fertilizer companies borrow to manufacture their products. Shipping companies borrow to fuel their trucks and container ships. Grocery stores borrow to stock their shelves. The U.S. Department of Agriculture reports that American farm debt reached nearly $562 billion in 2024, with interest expenses exceeding $5 billion annually. Farm bankruptcy filings increased 55% in 2024 compared to 2023, according to the American Farm Bureau Federation. And Chapter 12 filings in the first quarter of 2025 already exceeded 2024 levels. Family farm bankruptcies jumped 70% year over year in early 2025, according to American farmland owner data. This is happening during a period of relative stability. What happens when credit freezes entirely? We got a preview in 2008. When Lehman Brothers collapsed, the commercial paper market froze. Within weeks, global shipping nearly ground to a halt because companies could not get letters of credit. Food exporters could not finance their shipments. Central banks contained that crisis by flooding the system with liquidity. The question for 2026 is whether they can do so again. The corporate debt maturity wall is real. According to S&P Global, debt maturities are expected to jump from nearly $2 trillion in 2024 to nearly $3 trillion in 2026. Over $1.5 trillion in commercial real estate loans will mature by the end of 2026, according to multiple financial analyses, with some estimates putting 2026 maturities as high as $1.8 trillion. Much of this debt was originated during the ultra-low rate period of 2020 and 2021. Borrowers who locked in financing at 3 to 4% are now facing refinance rates that could be nearly double or higher. The U.S. national debt reached $38 trillion in October 2025, according to U.S. Treasury data. Interest payments on that debt exceeded $1 trillion for the first time in fiscal year 2025, according to the Congressional Budget Office. Net interest payments almost tripled over the past 5 years, rising from $345 billion in fiscal year 2020 to $970 billion in fiscal year 2025. The Committee for a Responsible Federal Budget projects interest payments will reach $1.8 trillion annually by 2035. The government now spends more on interest payments than on national defense. Food production depends on 3 pillars that are all under unprecedented stress: fertilizer, fuel, and finance. Half of global food production depends on synthetic nitrogen fertilizer. Without it, crop yields would collapse by 40 to 50%, and synthetic nitrogen fertilizer is manufactured from natural gas. In 2022, Fertilizer prices rose nearly 30% following the previous year's 80% surge, according to the World Bank. The war in Ukraine compounded already limited supply. Russia accounts for about 16% of global urea exports and 12% of DAP and MAP exports, while Russia and Belarus together make up 2/5 of global potash exports. Natural gas prices in Europe spiked so high that by October 2022, approximately 70% of European ammonia production capacity had been reduced or shut down, according to World Bank analysis. The 2022 annualized volatility of urea prices exceeded 60%, 3 times more than the 5-year average, according to Rabobank. China restricted nitrogen fertilizer exports by more than 90% in 2024 to stabilize domestic prices. The World Bank projects the fertilizer price index will increase 7% in 2025 before stabilizing in 2026, but market conditions are expected to remain tight, particularly for urea, whose prices are forecast to increase 15% in 2025. Fertilizer affordability has deteriorated. The affordability index for diammonium phosphate has surpassed its early 2022 peak, according to World Bank data, while indexes for urea and potash reversed their downward trends by the end of 2024. Food prices hit record highs in 2022. The FAO Food Price Index averaged 143.7 points for the year, more than 14% above 2021, according to the UN Food and Agriculture Organization. In the United States, food prices increased by 9.9% in 2022, faster than in any year since 1979, according to the USDA Economic Research Service. Food at home prices increased by 11.4%. In March 2022, wheat prices rose to more than $12 per bushel, an unprecedented level, according to trading economics data. The war in Ukraine disrupted 28% of worldwide wheat exports, according to the FAO. Prices for bread, pasta, and cereal at grocery stores continued to increase in 2023, but at a slower pace than 2022. The GAO reported that disruptions and changes to the food supply chain contributed to the double-digit increase in food prices in 2022. COVID-19 caused disruptions across the food supply chain as households shifted away from restaurant meals. Transportation bottlenecked when truck drivers got sick. The war in Ukraine disrupted global supply of agricultural commodities, including wheat, corn, sunflower oil, and fertilizer. There is documented evidence that food prices and political instability are connected. In Egypt in 2011, grain prices jumped 30% between 2010 and 2011. Bread prices rose up to 37%, and annual food price inflation hit 9%, according to research published in academic journals analyzing the Arab Spring. The uprising began in January 2011. In 1977, when Egypt's government cut subsidies on bread and basic food, riots erupted across the country, killing around 800 people, according to historical accounts. The government reinstated subsidies within days. Tunisia experienced protests in late 2010 and January 2011 that toppled President Ben Ali. While research from the World Bank showed Tunisia was more insulated from international food price shocks than Egypt due to government price controls, food price inflation and declining living standards were cited as contributing factors to grievances against the regime. More than 50% of the food consumed in the Middle East and North Africa is imported, according to a 2008 World Bank study. When global food prices spike, import-dependent nations feel the pain acutely. In 2022 and 2023, protests and food riots occurred in Iran, Sri Lanka, Sudan, Iraq, Albania, Kenya, Indonesia, Peru, Ecuador, Panama, Argentina, Tunisia, and Lebanon, according to documentation of the global food crisis. After the Iranian government ended subsidies for imported wheat, the price of flour soared by around 500%, exacerbating existing inflation that hovered around 50%. The UN World Food Programme Executive Director David Beasley warned in May 2022 that war-fueled food inflation would cause social unrest. He stated that when food prices rise and safety net programs are absent, Political extremists exploit that situation, leading to riots, famine, destabilization, and mass migration. The pattern repeats throughout history. High food prices contributed to the outbreak of the French Revolution in 1789. Failed harvests of 1,845 to 1,846 and the potato blight of 1,847 contributed to the wave of revolutions that hit Europe in 1848. The situation in 2025 is not hypothetical. It is documented. The 2025 Global Report on Food Crises found that over 295 million people across 53 countries and territories experienced acute levels of hunger in 2024, an increase of 13.7 million from 2023, and the sixth consecutive annual rise. The number of people facing catastrophic levels of hunger more than doubled to reach 1.9 million, the highest on record since tracking began in 2016. Conflict was identified as the primary driver of deteriorating food insecurity in 20 countries and territories, affecting nearly 140 million people, according to UN Security Council analysis. Armed conflict drives acute food insecurity in 14 of 16 hunger hotspots worldwide, according to UN Deputy Secretary General Amina Mohammed. Famine was confirmed in Sudan in July 2024, the first famine declaration anywhere on Earth since 2017. By late 2025, famine had been identified in multiple areas of Sudan, with 17 additional areas at risk. Over 21 million Sudanese face high levels of acute food insecurity, 45% of the population, according to IPC assessments. More than 200,000 people have endured catastrophic levels of food insecurity, according to IRC analysis. In Gaza, 100% of the population faced acute food shortages in 2024, the highest share of any territory analyzed. In August 2025, famine was confirmed in Gaza City, according to the Integrated Food Security Phase Classification. These were the most severe rates of food insecurity per capita ever recorded globally. More than 500,000 people were facing starvation in July 2025. The World Food Program projects that in 2026, 318 million people will face crisis-level hunger, or worse, twice as many as in 2019. The WFP 2026 Global Outlook reports a 20% increase in the number of people facing acute food insecurity since 2020. Humanitarian funding is collapsing at the same time. A 17% drop in official development assistance is projected for 2025, according to the Global Report on Food Crises. Humanitarian allocations to food sectors in countries with food crises could fall by up to 45% in 2025. Nutrition services to at least 14 million children are at risk. In this environment, the debt maturity wall of 2026 represents a potential accelerant. If corporations cannot refinance their debt, bankruptcies will spike. If bankruptcies spike, banks will tighten credit further. If credit tightens, the just-in-time food supply chain will seize. If the supply chain seizes, food prices will spike again. If food prices spike in already unstable regions, governments will fall. And when governments fall over food, what replaces them is rarely peaceful. The connection between financial crisis, food crisis, and armed conflict is not speculation. It is pattern. Wars destroy food systems. The Global Hunger Index 2025 found that between 2023 and 2024, the number of people facing famine more than doubled to nearly 2 million, with 95% in Gaza and Sudan, both active conflict zones. But food crises also cause wars. A nation facing mass starvation has limited options. It can buy food if it has money, it can beg for food if it has allies, or it can take food if it has an army. Research published in academic journals examining the Arab Spring noted that Japan in 1941 faced oil and steel embargoes that would collapse its economy within months. The attack on Pearl Harbor was not an act of confidence, but an act of desperation. Financial stranglehold produced military action. The Syrian civil war was preceded by the worst drought in Syrian recorded history from 2006 to 2011. The drought drove 1.5 million farmers into cities, creating social pressure that exploded when protests began. Agricultural production generated 25% of Syrian labor before the war. By 2024, Syria remained one of the worst food crises in the world. Afghanistan, the Democratic Republic of Congo, Haiti, Myanmar, Nigeria, South Sudan, and Yemen all appear on both lists. Countries with severe food crises and countries with significant armed conflict. This is not coincidence. The 2025 IRC Emergency Watch List identifies Sudan as the largest humanitarian crisis anywhere in the world. Gaza ranks among the most severe crises in terms of intensity. Both are marked by active warfare. The UN Security Council has recognized this nexus repeatedly. Resolution 2417, adopted in May 2018, condemned the starvation of civilians as a method of warfare and requested the Secretary General to report when the risk of conflict-induced famine occurs. The concern for 2026 is that this cycle could accelerate on a global scale. A financial crisis in developed economies would not stay contained to developed economies. It would ripple through global supply chains. Credit would freeze internationally. Commodity traders would hoard. Nations dependent on food imports would face immediate crises. Egypt imports over half its wheat. Tunisia imports over 95% of the soft wheat used in its bread. These are nations with documented histories of political instability triggered by food prices. The 61 developing countries that allocated 10% or more of government revenues to interest payments in 2024, according to UNCTAD data, would face impossible choices: pay creditors or feed citizens. The 3.4 billion people living in countries where net interest payments on public debt exceed education or health funding would see those trade-offs become lethal. A global financial shock in 2026 would hit a world already running hot with conflict. The number of armed conflicts globally has increased in recent years. The number of displaced people has surged. Humanitarian systems are already overwhelmed. The question is not whether a financial crisis could trigger famine and war. History shows it can and has, repeatedly. The question is whether the specific financial pressures converging in 2026, the corporate debt maturity wall, the sovereign debt burdens, the elevated interest rates, the stretched food supply chains, will be managed or whether they will cascade. The numbers suggest the margin for error is thin. Global public debt reached $102 trillion in 2024, according to UNCTAD, increasing $5 trillion from 2023. Developing countries' net interest payments on public debt reached $921 billion in 2024, a 10% increase from 2023. Farm bankruptcies are rising in the United States and across developed agricultural nations. Fertilizer affordability is deteriorating. Conflict-driven hunger is at record levels. All of this is documented, all of this is verified, and all of this is converging toward 2026. The pattern from previous crises is clear. Financial stress leads to food stress. Food stress leads to political stress. Political stress leads to conflict. Conflict leads to more famine. The cycle feeds itself until it burns out. Whether that cycle ignites in 2026 depends on decisions being made now, decisions about debt, about trade, about agricultural investment, about humanitarian funding. The numbers are warning us. The question is whether anyone is listening. The bond markets are telling a story. The fertilizer prices are telling a story. The bankruptcy filings and the hunger statistics and the conflict maps are all telling the same story. Financial fragility and food insecurity and armed conflict are converging. They have converged before. When they converge, millions suffer. The year 2026 approaches with documented risks. The debt must be refinanced. The food must be produced and distributed. The peace must be maintained. If any of those systems break, history shows what follows. The connection between the ledger and the bread line is not theoretical. It is arithmetic, and the arithmetic is pointing toward danger.